Thank you for joining me. I'm Juan. So the markets are going crazy, fluctuating up, down. I had a thesis that I set a few days ago where I mentioned on this day here, I posted this 2 days ago here when I saw this big drop. I'm looking for important technical pivot points at 353 to 351 support zone. If that doesn't hold, then I can see it falling down to the 339, 341 which would be the next possible target. And if that zone broke, then 327 would be the next target. Now, once it tests these zones, I like to wait for confirmation by the next candle. So on this day is when I posted, and I stated, because I saw this big drop, I'm becoming a little bit more bearish, but I want to wait for the next candle and get confirmation by the next candle by seeing a bearish candle. So once I saw this green candle here and the way it opened up this day, I held off on purchasing puts. And we see the rally today. Today the rally has been crazy. So this is why it's very difficult to predict the market. For someone who's a long-term investor, you really shouldn't care about this stuff, because this is speculative, this is high risk, it's not worth your time. If you believe in a company and you've invested in the company and you basically looked at the entire value of the company, like the EV, the enterprise value, the whole value, how that company would price if they were selling it today, and you feel that it's at a good price and you feel that it has great potential, then invest in the whole company and don't look at it for the next 20, 30 years. Or even better, just get a mutual fund and invest in a mutual fund and put money into it every month and not care about this. Again, this stuff is for a very small portion of my net worth. Any speculative stocks that I have, any day trading, any swing trading, very, very small portion. And the majority of my money is in retirement. Even you can have access to the Excel sheet where I talk about stocks, or I show the stocks that I've spoken about. I don't necessarily invest in those stocks, but I've made videos on those stocks. Since I've spoken about those stocks, I just put them in the Excel sheet and see how they performed. And it doesn't mean I invested in them, and I don't recommend investing in them. I just stocks I talk about and just like to see how they perform. But let's take a quick look on how to, if you were going to trade any stocks or any ETFs, what your strategy should be. So looking here, I made the post a few days ago, and then it hit one of my resistance points exactly. And then when I saw this, that it rejected here, I said, okay, you know what? I'm leaning more towards getting puts, but I want to wait for a confirmation candle. So that was here, this circle here. I didn't get the confirmation. My other thesis, based off of the Fibonacci, was that if it did bounce, and here I have this, I posted this a few days ago. You can find it on YouTube. On July 22nd, the SPY bounced off of support and rallied 16%. So that was here. It bounced off of this support and then rallied 16%. So I said that if the SPY does bounce between this 351, 353 zone with bullish price action, we could see a 12% rally over a month. So I will wait for a clear price action between 351, 353. And this is what I marked off here. So now we had this bounce here. This is that zone that I spoke about. It's bounced off of that. It's bounced off of this again. And this is the rally I'm talking about. This blue shaded area is a Fibonacci retracement recovery that I mentioned. So if this does continue to be bullish, and let's go to the intraday here to show it, it wasn't able to break it here, then it just dropped, and it bounced again in this exact support area that I had previously pointed out, and it just up rallied, and then all day it's been going through this channel here, and it broke out through this channel on the upside. So now it's going to retest this area, possibly retest this area. This is what I expect tomorrow. But it's again, it's a thesis. This thing can do its own rally, whichever way. It has its own mind. It's a big risk. It's a, so just, this is just a thesis, and my thesis could be wrong. But if it opens up strong, I feel like sometime maybe pre-market, it may go test this 371 area. So this 371 area, if it's not able to break it again, then people are going to load up on puts because they had this big fall here, about a 3.80% drop from this point here to the low, 3.8%. So that's what people are going to be looking at. They're going to look at this. They're going to see what it does here. If it tests this, if it's able to break it, then my earlier thesis of that recovery, it could go for a long rally over the next few days, over the next few weeks, over a month, like I posted here. So it's going to be really important to look what it does here. So if you're going to day trade a stock that moves similar to the SPY, there's a lot of stocks that move similar to the SPY. 371 here. Watch what it does to that. If it moves up and it tests this, if it's not able to break this, then you may see another crash just like this. So you wait, you may see it tap it, then pull back a little, and you may see it tap it again. And if it's not able to break it the second time, it's probably going to go downwards. Now, if it does break it, and then it comes back down, and this becomes support, you may see a little rally. Again, these are all guesses. Nobody knows for sure what it's going to do. This is what a day trader does. This is what a swing trader does. They build a thesis. So I build my thesis according to what it did in the past, areas that it bounced off the past, areas that were resistance or support in the past. And I'm saying, oh, it's tapping these areas again. If it's not able to break past resistance, meaning like a stock hit a certain point, let's say $350, and over the past 5 years, every time it taps it, it rallies downwards 5%. You can build a thesis saying that I believe if it taps this and it's not able to break it, it's going to go to the downside 5% based off of the past performance. That's all it is. So I'm building a thesis according to past resistance and support, some moving averages, and also Fibonacci retracement. It's not for everybody. I would say the majority of people should just invest in a mutual fund, not watch these YouTube videos, and not look at their money for the next 20, 30 years until they're ready to retire. That's the best thing to do. If you're like me and you like to take a small portion and you like to be a little bit more aggressive, and that's, you like to invest in some stocks that don't exactly have positive revenue right now, but they have potential and it's a high risk, high reward, do so, but do so responsibly with a small portion of your net worth that you don't count on. Don't do it on mortgage money. Don't do it on your 401k funds, nothing like that. Just if you have extra money and you want to, do it, and do it the best way. Do it the smart way. So to me, this is my thesis. I mentioned that I was becoming more bullish once I saw it test that previous resistance and it rallied down. It went down like that 3.8%. I said, but I want to see what the next candle does. I want to see how the next candle opens. If I would have seen another red candle or another bearish sign, then I would say, okay, this is the time to load up on puts if that's what you want to do. But it opened up green. So it's going to hit that area again. So watch out for that tomorrow. If it hits that area and it's not able to break it, you should see another 2% drop possibly. And if it does break it and if that area becomes support, then you'll see a nice little rally. So that's it. Thank you for watching. See you on the next video.